Today, Ether ends the week in the red following weaker than expected August job figures. Crypto billionaire Justin Sun says his World Liberty Financial tokens have been frozen, and Chainlink co-founder Sergey Nazarov reveals what he discussed with SEC Chair Paul Atkins during a meeting this morning. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies are mixed to end the week after it was revealed that payrolls rose less than expected in August. As of noon Eastern, Bitcoin climbed 1% to $110,700. Ether, however, dropped 0.5%, and XRP was pretty much unchanged. Now, the moves come amid worries about a slowing economy following weaker than expected August job figures, which will likely keep the Fed on track for a widely anticipated rate cut later this month. Now, for the week, as of around noon, Bitcoin is up 2% on pace for its first weekly gain in the past 3. Ether dropped more than 1.5% and was heading for its first back-to-back weekly loss since late June. And then XRP was down nearly 0.5% on pace for 2 consecutive weekly losses. Okay, let's talk about the top stories. Tron founder Justin Sun said that his World Liberty Financial tokens have been frozen. Now, Sun, who is one of the biggest known backers of President Trump's crypto ventures, took to X yesterday, addressing the post to the World Liberty Financial team and the global community. He pointed out that he was an early investor and that he contributed not only capital, but also his trust and support for the future of the World Liberty Project. He then went on to write that during the course of operations, his tokens were unreasonably frozen. Sun called on the team to unlock his tokens. Citing blockchain data, CoinDesk is reporting that World Liberty Financial blacklisted Sun's address with 595 million unlocked World Liberty Financial tokens on it, worth more than $100 million. Now, according to CoinDesk, the freezing follows several outbound transactions from Sun's address. Then today, Sun seemed to change his tune, doubling down on his commitment to World Liberty Financial projects, writing on X that he was committing another $20 million to World Liberty. Now, the tokens became publicly tradable earlier this week, and they've fallen in value since then. As of around noon Eastern, WLFI climbed more than 3% in the past 24 hours and is down more than 20% since it began trading on Monday. That's according to CoinMarketCap. Now, we reached out to World Liberty Financial, but didn't hear back right away. Sun has also been a big investor in Trump's meme coin, announcing in July that he was buying another $100 million worth of that token, doubling his total known stake of digital coins tied to the president. Finally, the SEC and the CFTC are reaffirming their commitment to working together on regulatory initiatives, including rules for decentralized finance. The agencies published a joint statement today stressing that harmonization between U.S. market regulators is essential to the viability of a broad range of innovative products. Now, the statement went on to say that the agencies are building on their joint statement of facilitating trading of certain spot crypto asset products and are highlighting the innovations that greater harmonization of SEC and CFTC regulatory frameworks can unleash. According to CoinDesk, the heads of the SEC and CFTC plan to hold a joint roundtable on September 29th as a next step in their efforts to make U.S. markets friendlier to financial firms, including those involved in crypto. SEC Chair Paul Atkins and acting CFTC Chair Caroline Pham presented a united front when discussing future regulatory moves by the two agencies. And during a call this morning, Atkins reportedly said that it is time to leave turf aside and really collaborate. All right, sticking with the SEC for our main story. Paul Atkins invited Chainlink co-founder Sergey Nazarov to meet with him this morning to discuss how the U.S. government plans to use blockchain technology for things like bringing data on-chain. I spoke with Sergey shortly after his meeting with the SEC chair. The co-founder of the decentralized network that provides financial data to blockchains explains what was discussed. So you just sat down with SEC Chair Paul Atkins this morning, and it comes right on the heels of this announcement from the agency yesterday that they're revamping their proposals on how it should handle crypto. Now, to start at a high level, what did you talk about this morning?
So there were a lot of the topics in the meetings ranging from transfer agency, which is a requirement for how equities and assets can be moved from different individuals and firms, onto compliance. Compliance was discussed. Interoperability across chains was discussed. and also what can be done and what are the factors for having firms in the US do tokenization more so inside the US rather than outside of it. So I think there's now a very serious effort underway by the SEC at multiple levels to solve many of these open questions on transfer agency compliance, interoperability, and I think it's all seeking to culminate in more tokenization in the U.S. Economy rather than outside the U.S. economy, which I completely agree with as being the right goal.
Now, what did you want to get across to Chair Atkins in this meeting?
I generally want regulators to understand that they can enter a new world of automated and embedded regulation, because smart contracts, which are the mechanisms that actually manage the assets and hold the assets on blockchains, can be made conditional. So you can create all kinds of conditions around compliance, identity, transferability, and various other conditions that regulators want. So I wanted to make it very clear, and I think we succeeded in that in the meeting, that data going on chain, compliance working on chain, connectivity between chains, and basically the ability to set conditions for how transactions can happen is something that can happen publicly on chain rather than having to have it be done privately within a bank's compliance department. And this is actually a really big shift, because from a regulatory point of view, instead of relying on a few select entities to run really big and costly compliance departments, what you can do is you can set conditions for how transactions have to work. And those conditions have to be met in order for the transaction to continue. And no person can decide to subvert them. So I think this was a really interesting topic that was also well received.
So you brought up the topic of tokenization, and Chainlink is really big when it comes to that. It's also been a big topic in recent days. We just had Galaxy Digital on yesterday talking about a partnership with Superstate to put that common stock on the blockchain. We've also seen non-public companies with tokenized listings on chain, which has gotten some pushback from global exchanges. Where do you stand on this trend of private companies with tokenized shares? And is it something that you've discussed with the chairman?
I think private companies with tokenized shares is a more innovative approach that seeks to circumvent the current rules and just put stuff on chain and get them out there into the world using a transfer agent. So meeting the transfer agency rules, but maybe not necessarily meeting all the necessary requirements for everything else. I think there is definitely an interest from the SEC to update the transfer agency rules, and you can see as much from the speeches of Chairman Atkins and the different points that he and others have made from the SEC. I think once you update the rules of how you can essentially create a publicly movable and shareable equity, which is really what transfer agency is all about, then you'll see a lot more tokenization of private equity, public equity, funds, and other similar things. Until those rules get simplified, I think you'll have a few people on the cutting edge that are willing to do it and kind of hope for the best. But I don't think that the bigger institutions will take that risk. I think the smaller groups will take that risk. And so you'll have an inventory of smaller groups or smaller companies kind of doing that. And that doesn't mean that they're bad companies. I think it'll still be really high quality assets, but it won't be the large institutions or their clients until those transfer agency rules are fully updated.
It's a really good point, and it's something that I've been talking a lot about with Superstate the other day. For example, they said that those in the pipeline are really these more crypto native publicly traded companies that are willing to jump in, but absent a rule change, or in some cases people are looking for hard and fast rules from Capitol Hill and some sort of overarching crypto market infrastructure bill to be passed into law before they would feel comfortable tokenizing shares of a public company. But to your point, do you think that this is something that just within the SEC, a rules change on this front would be sufficient to make other institutions comfortable with getting into tokenization?
Yeah, absolutely. We already work with many of the leading banks, institutions, asset managers, and institutional grade issuers. And I already have many personal conversations, and we have many engagements with them, planning and are already working to go into live production tokenization efforts in anticipation of these changes. And these changes are actually very technical and specific to something called transfer agency, and how tokens can be moved and how tokens can exist on a blockchain rather than having to exist in a very specific set of clearing and settlement rails and systems. And these changes are not that dramatic, frankly. I think they're pretty straightforward technical legal changes that through some amount of guidance and rulemaking can happen pretty quickly. I do think there is a kind of tsunami and growing group of really high quality issuers that are in the process of getting technology providers, getting a digital asset team being set up to do the tokenization. Because if you really look at Chairman Atkins' previous two speeches from May and July, you will see that the goal of the SEC now is really to enable tokenization. And the recent announcement you spoke about also restates that goal, is that tokenization in the US financial markets should be an easy, smooth, and riskless process. That is something that they've made extremely clear now. And I also felt it in my conversations with them, and our team is also meeting with them later today again. And we are working with them on a consistent basis to try and create clarity on what changes to transfer agency and other key rules would be the most useful for our industry. And we are receiving a lot of very real collaboration in that our goals in making the industry grow and tokenize in the US financial system are shared by them.
Okay, that's all for Crypto World this week, but we will be back again on Monday, and we'll see you then.